dig into the markets now. New intraday highs, yes, for the Nasdaq and the S&P 500 ahead of a big week of Fed testimony, bank earnings at the end. Let's bring in our market panel. Joining us now, Ryan Dietrich of Carson Group and Nicole Webb of Wealth Enhancement Group. Welcome, guys. Looking at these numbers, looks like Apple quietly retook the market cap crown today, edging Microsoft as the S&P tech sector leads up a little bit more than 0.5%. And Nicole, you both expect stocks to move higher from here. The question I have is how much? It better be more than 5% over the next 12 months to beat low-risk fixed income, right?
Yeah, absolutely. We actually think there's going to be quite a bit of churning here. You know, when you see historically an overbought market like this one, we do get some churn higher in the months to come. And look, we're going to continue to expect to see kind of this level of defensiveness, continued earnings per share growth out of these mega tech names. And so as we count down the days to those earnings coming in, we think that the market will respond favorably. And we also look forward to Fed testimony this week as we start to expect to hear more about a normalization cycle versus a rate cutting cycle. And so we are very hopeful that the Fed moves towards not a reflexive cut on the backside of something where they waited too long, but instead taking kind of cues from abroad where they'll start to test the waters and bringing rates down. Okay, now speaking of cuts and feeling bullish about stocks, Ryan, why do you think we get 2 cuts this year? And perhaps more important, is it a threat to your bull thesis if we don't?
Yeah, John, thanks for having me back. And first off, no, we don't think that's a threat. I mean, let's talk about what's going on with inflation. It does come down to that. I know we've got the CPI and the PPI, but as we all know, the PCE is the Fed's favorite measure of inflation. The core PCE has 178 components. Let's keep this real simple. 34% of those components are negative year over year. So, and like outright deflation, that's more than we were seeing in late 2019. There are really some positive signs. Used cars down 5 months in a row. Grocery store prices down 4 months in a row. We get it. Shelter is the issue. But John, there are big improvements under the surface. We're optimistic we're going to see that. And I mean, the truth is this, the Fed, I mean, I saw Neil Dutta's up next. He's going to say maybe they should cut in July. I'm not disagreeing, but I don't think they're going to. I think they're going to set the stage for that. They're going to cut in September and likely in November again because inflation is coming back. And we do not think it's a bearish signal. We think the economy is still strong. We can get into that stuff. Bottom line, again, is this is a bull market. Been coming on with you guys for a while saying that. It still looks pretty good to us. Okay. So, Nicole, we know that the Magnificent Seven, or maybe as I think you would put it, the Mega Six, have really led a lot of the gains that we've seen through the first half of the year. We also know that they've led a lot of the earnings growth. Earnings expectations are really strong here for the second quarter as that season kicks off, really, I guess, sort of officially starting on Friday. Expectations of 9% year-over-year growth, earnings per share by FactSet. How much of the onus is now on these mega cap tech names to deliver for us to continue to see the S&P move to record high after record high, given valuations are as rich as they are? Yeah, I mean, you have this confusing convergence of a lot of themes. And so whether you try and navigate in isolation or you try to bring them all together into one picture where you have all of these tailwinds butting up against headwinds. And, you know, what we want to believe is that we are still in a bull market, that we do expect to see earnings growth that is possible, especially with a GDP backdrop around 2%. That mega technology here in the second quarter is probably, there's going to be a lot of lift for them to do, but in the back half, we actually see those earnings numbers coming through for more of the breadth of the market. That rate cut expectation, you know, sitting at 80% for September, that's favorable for the market, and the data is starting to really support that on a month-by-month basis. And then we really do believe that you're going to continue to hear stories about productivity, advancement, and cost cutting, all from investment into AI. You saw the response today to Corning. Those stories are likely to continue as we give more time to 2024 calendar year.